Two and one. Hello, we are live. Hey, Mike, how's it going?
Hey, what's up, Ralph?
What's up with you today? How's it going? You're off. You're telecommuting today, or what's the
Yeah,
gig?
man. Yeah, I'm flipping some hours around, but yeah, definitely want to be here talk about some trading stuff.
Oh, definitely, and I'm excited. We have actually. Do I pronounce your name Yusuf or
You-
Yusuf?
It's
Yusuf.
usual.
Yeah, we got Yusuf here, and Yusuf is a very knowledgeable trader. He's been, you said you've been trading forex for quite some time and a few other things. And now or why don't you talk about yourself, Yusuf, so everyone can get to know you a little better.
Hey guys, what's going on? So basically, I came from the forex game where I trade forex for a few years, but with the emerging developments in crypto, it kind of got me attracted and drawn there. So I've really been focusing on crypto, not only for the volatility for trading purposes, but also for investing and holding. So this space has been, really interesting to me. So I kind of spent some time in it.
Cool. Yeah, I definitely think it's a very volatile market, and I mean, believe it or not, most people who are in crypto it's because of the volatility. We definitely preach about holding and stuff, but what drew me to getting back into it was the volatility. So
Yeah, so why don't you just kind of tell us a little bit? You've been trading forex, you've been doing, just like let people know a little more about you, man. How'd you get into this Bitcoin stuff? How'd you get into this trading thing? Did you spend some time in like the pits, or how do you learn? I know enough about charts to be dangerous.
Right.
How'd you get into this rabbit hole? I mean, it's like I'm looking at what you got on your screen. It's like, this is cool.
Yeah, well, to kind of give you guys a backstory, I first got attracted into the whole trading and currency space by a gentleman that kind of promised me some returns. And it was a pretty reasonable amount of returns for the type of investment I wanted to put in. And long story short, he didn't actually deliver on those returns, trading through the foreign exchange market. But what it did allow me to do was...
Okay, and just to clarify, just because I don't know if people understand, when you say foreign exchange, were you doing forex, were you doing currency, or were you trading like soybeans and corn, or?
So foreign exchange is typically currency when we talk about the foreign exchange market. Depending on the brokers that you guys are using, it could extend to other things like oil and commodities, but typically, we're talking about currencies like the dollar, the Canadian dollar, the yen. Those are the things we're typically looking at. So that's what I was trading before. And so I met a trader that came from that space. He said, hey, if you give me X amount of dollars, I could promise you X amount of return. That kind of fell apart, but it did kind of pique my interest to kind of take that moving forward. But since then, it's been an up and down. I've had tremendous success. I've had tremendous failures. It works both ways. Statistically, I believe it's like 90% of traders lose money. 5% of traders make some, lose some. I think it's like only maybe 1% that actually can live off trading on a full-time basis. So it's not a game for the thin of heart, the thin skin and the weak of heart. You have to be able to go through some of those ups and downs and kind of weather those storms. So fortunately, I've been able to weather some of those losses. It hasn't discouraged me, and I kind of persevered through those things. So that's kind of been key for me, just being patient, being disciplined, and going through those transitions and accepting, sometimes you can't win them all, but keep moving forward.
Wow, so you are in the 1%. So are you a full-time, because you're definitely right about that. Everyone has the dream of being a trader, just like everyone has the dream of being like a YouTube influencer, right? But
of course,
definitely there's the pointy end, we all talk about it, but you actually make a living as would day trader be the right term, or technical trader, or?
Yeah, you can say day trader. That's fine. I consider myself more of a technician or a technical analysis or a technical analyst. And I do it full time for a living. That's all that I do. So if I'm not trading, I'm not eating.
Oh, wow.
nice.
So that's pretty interesting for sure.
So let's take a look at this. We've got some, I think it's worth popping in because I was just looking at my, Mike and I were talking, we were looking at our Coinbase literally right before. And, Bitcoin was 10,800 this morning and it popped down to 9,550 and now it's back up to 9,700. So this is, this is a world I know enough to be dangerous about, but I don't play this world because I always buy high and sell low whenever I do this stuff. But
Yeah.
This is what you do, right? You're in, you're out, you're making money when it's going up, you're making money when it's going down, you're right. Like
that's the idea. I win more of my trades than I lose. That's the name of the game, and then it's really when it comes to trading, it's understanding how to manage your risk. So I have a pretty attractive risk profile. I'm normally targeting 2, 3 to 4 reward to my 1 risk. And I'm typically winning more trades than I'm losing. So in Bitcoin, for instance, coming back to Bitcoin, the reason why I like trading Bitcoin so much is, for me, it's been one of the more technical pairs. I think it's a very Fibbo pair, meaning that it respects Fibonacci's really well. And I like trading on Fibonacci's. So for a lot of different reasons, I like trading Bitcoin. If you speak to other traders, they might share some of the same sentiments. So in the game of trying to capture gains and capture returns, it's not about looking the smartest. It's not about being, quote unquote, the best. It's more so about positioning yourself where you could be the most successful. So if I could trade soybeans and be really successful, I'll be the best soybean tradesman.
wow.
So that's interesting.
Whatever I could capture returns and gains on is what I'm going to trade. And particularly with cryptocurrency and Bitcoin, even more specifically, there's a lot of opportunity here. So that's why I like trading Bitcoin personally.
Wow. Okay. Sorry, you can go ahead, Mike.
I guess I'll say, so you're talking about Bitcoin, but so when I first I kind of fancied myself trying to get into the trading thing, and I realized I was out of my depth and it would take way more of my time than I imagined. Mm-hmm. But when I first got involved with it, I was playing around with alts, and I guess my goal was to find, I know one time I made a big gain on Einsteinium, and I bought it and then it shot up 90%, and I was like, okay, I heard him sold it, and it was basically a pump and dump, so are you following pump and dumps? Are you following I guess you say you're mostly into Bitcoin, but I guess since volatility is where you make your money, wouldn't it make sense to go with the pump and dumps?
Well, it has to be measured, sustainable volatility. So pump and dumps are really illegal, at best unethical. And so that's one thing. I don't trade anything on a pump and dump. Secondly, if you look for some of those smaller altcoins, typically you're not going to find them. It's going to be really hard to trade those coins on a reputable exchange. Say for instance, I'm using JFX for trading. I'm not going to find those smaller coins on there. So I stay away. I know people that look and scour the earth for coins that are going to pop at certain times, and some are kind of hit and miss. But what I look for is systematic, sustainable growth. I'd rather make 1%, 3% a day, whatever it is, every day versus making 0%, then one day make 1,000%. So those things don't appeal to me. In my humble opinion, I feel like it appeals to people that want the Lambos.
Yeah.
I don't need the Lambos, but what I do need is a system, an environment to where I could consistently be successful. That's all I need.
Yeah, well, that makes sense.
I think this is the thing too. I think, you've got marketers who, drive up, and I guess Ty Lopez is the extreme example, right? He doesn't even own well, maybe he does now, but he rents the house, he rents the Lambo, rents a bunch of pretty girls, shows the lifestyle, and he doesn't actually make money doing what he's doing. He makes money selling the dream. Now, in your case, you're living a dream, but you're not selling the dream. You're actually living the dream by actually performing and trading on this. So I think the first thing to ask You know, you mentioned you win some and you lose some, and I actually noticed your video yesterday, or was it 2 days ago? You took a Litecoin position, and it didn't pan out, right? It happens. But like, let's just start with, on a good day or a good week or whatever your metrics are, let's say you take 10 trades. Do you win them all? Like, are you going for an 80% rate? Is it a 20% rate? Like, what's your ratio? Because ultimately trading it's not emotional. I mean, you are like a robot just going in, getting out, and, it's like poker. You can't win every hand, right?
Right, absolutely. So I have a high probability system. Most traders typically, most successful traders, they're typically winning maybe 60% of their trades. In the forex space, I was winning about 70+%. In the crypto space, I'm winning over 80% of my trades typically.
Wow.
I'm glad you brought up Litecoin. So I bought Litecoin at 209. I'll just say 210. From 209 went up to like 213 and change, something like that. So I was running profit on Litecoin, but then it started to violate specific levels that would have indicated a reversal. So the way I managed that trade, instead of waiting for that reversal to take place, which it did today, I actually stepped out of that trade. And I kind of mentioned that in the video and in the comment section. Say, hey guys, I got to step out of this. Like, I thought it was going up, but it looks like it's going to dump.
And what's a reversal? Because I've heard that term, but I don't actually know what that term is.
So a reversal, see, I'm a price action trader. I trade on price action. So I could have a beautiful game plan, script, ready to trade. But if the market says, Yusuf, you're wrong, then I'm wrong. I'll just get out. It's not a big deal. So I obey the market. It's not, these are perfect trend lines. This is perfect, and this has to work out. So if the market shows me a sequence of things that is that goes against my plot, I'll step out the market. It's not a big deal. So if I enter a trade, there's certain things that I need. I allow certain room for the market to move because you have to give enough room for your trade to breathe. But when the market starts closing below certain levels that clearly violates your prediction, step out the market. Why wait for it to hit your stop loss?
Wow. So, so you didn't actually even hit your stop loss.
Oh, no.
You pulled out early because you saw the trend or the reversal or whatever terminology you're saying that It didn't work out. Wow.
So in that Litecoin trade, I actually closed most of my positions around my entry price. It was like at 2.10 and 3 cents. So it was right about at my entry. And I left a very small position open just to see the trade would turn around. When it did it, I closed that out as well. So I try to keep my stop losses tight, and I look for the most attractive trades available. So that's just my personal trading strategy. I was having a conversation with another gentleman, and, whenever you put your information out to be scrutinized, people will, share their opinions one way or another. And there was a argument made that maybe my stop loss was too tight, where my stop loss, instead of being at 202, my stop loss should have been at 180. Well, Litecoin is at 175 last time I checked. So
maybe if we can step back, because you're in the midst of it, and I watched the video, so I can kind of follow along. But I think people tuning in will have no clue. Like, you're basically, beeping and clicking and speaking technobabble. Like, they can tell you're like, I just listening to you, I can tell you're a fucking genius. Is basically the simple. But like without context. So can we actually? Is it possible? I know I'm putting you on the spot. Can we actually like pull up your Litecoin trade and we can?
Yeah, absolutely. Hold on 1 second.
Look at kind of like understand how you think, because I know for me it's interesting. I mean, I personally will probably still not do this, because I will live vicariously through you, Yusuf. But,
I guess I was going to make that point too, is like, what we're really showing is how much work is involved in actually doing this correctly, because a lot of people, it's romanticized, like the crypto day trader, or even like people who see Wolf of Wall Street and they think they can just hop off the porch and like, make a ton of money trading penny stocks. And the reality is, there's math involved. There's a lot of predictions and, I mean, the kind of level of like chart surgery that's involved in like doing this right, you know, it's a craft in its own, you know?
Oh, absolutely. So let me show you. This is Litecoin. And on the charts, it's phrased as LTC USD. So
now here's a question: are you always trading U.S. pairs, or are you also, because being a forex guy, you're probably more comfortable with the pairs, right? Of going from U.S. to BTC to ETH to whatever, right?
I really like trading BTC pairs. There's a lot of stability in BTC pairs. Whenever you're trading anything with the dollar, you're liable to see a spike in volatility at any time. Where the BTC pairs, they're a little bit more stable. They pay out a little bit slower. So I like it, even though they don't move as fluidly or they might have a little bit less of a range. I like that slow payout. That's beautiful. I mean, that's just how I like it. Everybody likes their pips or their gains differently. So I'll trade USD pairs. I trade a lot in the BTC market because I love the BTC market. I'm really successful there.
Okay, so let's take a look at this chart. So this chart I'm looking at, we've got a time scale 3-4. Wait, that's basically yesterday. So this is today. Wait, so that dotted line, is that yesterday or is that today, or where are we? So 3-4.
This is where we are right now. We're on the hourly chart.
Oh, okay. So I see 7-6-5-4. Those are the days in March. So that's March 4th. That's March 5th. That's March 6th, and that's March 7th, right? Yeah, that's the story of Litecoin. It's over the last 5 days.
Right.
I see what you're saying, because I remember I looked at this, and I think I bought $5,000 worth of Litecoin on the 3rd or 4th of March. I'm more of I wasn't trying to play the trade, but like the barometers were in the piece where like I wanted to get back in. And it looked like there was one possibility where Litecoin would shoot up to like 250 or 260, in the next 2 weeks. And then once it hit that, the bull market would fit back in, right? So
exactly.
I made a calculated risk. So it seems like you also made a similar risk, but you were looking to get in and get out. So why don't you talk about how you set this whole thing up? So, right, we're looking at this thing. There's a bunch of charts. There's a bunch of bars. What the heck is going on here?
Got you. Matter of fact, I'm gonna pull up the daily. Well, first of all, I'm gonna show you guys on the hourly. So, I day trade, intraday trade, where I take trades where I open and close within the same day, and then I also swing trade, where these trades I typically keep open for 1 to 3 weeks, sometimes a month, sometimes more than a month. So
okay, so just to clarify, there's a term you said called swing trade, and then there's a term called day trade. Now, do you also do long-term hold, or are you trading only?
As far as actually holding the coins?
Yeah, I'm just curious on your strategy, because in my case, I'm long-term hold, but occasionally I will swing not to actually sell, but I might swing to get in. So like, for example, I've been trying to put over the last, like I've got another 20 grand I'm trying to put in the market. And because of how the indicators are, I put in 10 grand back, like I think Sunday or Saturday. I put in 5 grand on the dip yesterday, and I still have another 15 grand. I'm waiting for another, like there's another level for Bitcoin right now when I'm looking at it. So it's like, it's kind of swing trading, but it's not. It's just more swinging into a long-term hold. Do you see what I mean? So gotcha. That's what I'll do, but I'm just curious about how you're doing it. You're day trading, which is basically you're in and out of the position in a day. Is that a fair statement?
Yeah, so you really want to call it intraday trading, and it doesn't always line up to be exactly a day, but most of the times it's within a day. Sometimes it could be like 36 hours, 38
Okay, so some sort of sub 50-hour window where you're in and out based on certain levels. Okay, so that's the short term. Exactly. And then you have what you call swing trading, which is you'll take a 1 week position or a 3-day, or what's the longest term you'll take on a swing trade position?
It just depends. I've held Euro USD in the forex markets, which is the euro currency, the euro dollar versus the United States dollar. I've held that. I held a position with them for like maybe a month, 2 months at a time before. Wow. So it just really depends what type of how the pair is moving. So if there's more upside to capture, I'm gonna attempt to capture it. So I don't have, again, it's so important to underline. It's not about what I do. It's about what the market gives me. The market says, hey, we're going to continue going up. I'm going to continue participating in the wealth creation. If the market says, hey, that was a cool plot that you did, Yusuf, but we're actually going the other way, I'm just going to step out the market. So I'm just a passenger on this train. Whatever happens, I jump on the train or jump off the train. It's not about if I'm swing trading, I would hope to be in a position for at least a couple of weeks. But if it's a week, if it's a week and a half, if it's 6 months, then I'm in the position. I mean, it doesn't matter.
Wow. Okay, so let's dive into this. So now that we have the terminology straight, and I only want to clarify because everyone uses different terms, and I want to make sure I understand what you're saying. So I'm a big terminology guy. So
Sure.
Let's set this up. Okay, so you're looking at Litecoin. You take the floor. What's going on here?
All right, so I'm going to show you guys on the hourly chart. I don't really use indicators and oscillators like RSI, MACD, stochastics. These are very common indicators and oscillators people use to kind of measure the market. The reason why I don't use them is because they're lagging indicators, and I don't believe in using lagging instruments to help predict the future. That's just my personal thing. There's something, and these are the indicators right here, what you see in these squiggly lines. So there's some advanced techniques that they can be useful for instance, like measuring divergence, which basically lets you know when there's a likely turnaround in the market. And that's all fine. But what I focus on more than anything and above everything else is price action, how price forms in the market. So to give you guys an idea of Litecoin, I entered Litecoin right around 209. I think my entry was like right around here. So plus the broker fees, it was somewhere around here when I entered the market. As you can see, it was on this little uptrend. It spiked up. So this right here, and I'm going to show you guys.
Okay, so you entered at 209, and when you entered, the data told you that there was what were your levels or limits, right? So because ultimately I feel you got a probability number. You're saying there's a 50% chance that at 209 it's going to go to what, 230 or 240, and then there's
Sure. So when I entered this trade, I had an 80% probability that I would have seen at least a 5% gain, at least. I also got an indicator. I have my own custom system that lets me know when the market is potentially long-term bullish or potentially short-term bullish or vice versa. So when I got into the market, I actually got indicated at 206, and I got in late at 209. So that kind of put me in a bad position as well. But I seen a really huge upside, almost going to 280. So I said, you know what, I'm still going to get into the market. But had I got in at 206, I actually would have closed in profit. But that's neither here or there. What's important is that I did get into the market at 209. And at that point, I still had an 80% probability of seeing a 5% gain.
Okay, so 5% was you were coming in at 209, and your goal was to get out at basically 220, it'd be what, 221 or something like that? That's 12 months.
206. I mean, we actually almost seen the 5%. We seen the 5%. We seen exactly 5% at 216. So it worked out, but I held the trade too long. So it's not just about the system, it's about the conductor. So there's
strong hands, right?
Yeah, there's a human. If had this been a robot, they would have closed this trade in profit. But because I'm a human and I decided to hold the trade because I allowed a greed element to sit in, as I saw a potential upswing to the 270s, 280s, I held it too long and I paid for it. So, and I paid for it was very nominal. I mean, very nominal. It was less than 1% of my account. But it was still a loss nonetheless. Because I did close most of my positions. I left one position open. But here was the bounce I want to show you guys. There was this bounce right here when the market broke up, and then it bounced right here. If you guys see this little candle bar, when this bar failed to get above here, or better, when the market failed to get above here, and then when I seen the market start to close over here, it was clearly a sign of a true reversal.
Oh
And
wow! So that bar was basically like the make or break moment. So if that had gone up, we'd be like to the moon. And since it didn't, we're like, oh fuck.
well,
Time to get out.
it's on a small time frame, so the hourly time frame isn't all that credible,
Uh-huh.
but it's little things in there that you could take as clues and as in hints. That's why I didn't go crazy when I seen this, but it was reason to worry. And mind you guys, I'm not looking at any of this stuff. I don't care what's going on down
Yeah.
here. In fact, when I'm trading, I don't have this stuff up. I'm just looking at price action. Are we forming higher highs or are we forming lower lows? So
I mean, but you obviously your gut was right because if you look at it, if you held on, because I mean, I'm again a long-term guy, so I'm not getting in and out, right? So I bought some Litecoin at 218 like 2 weeks ago when there was that potential, and then I bought again at like 209, and right now I'm at 180. So the 15 grand I put in the Litecoin is probably worth 10 grand right now. Now, but again, I'm not trading in and out, so it doesn't bother me. But you obviously know something.
So, what size candle do you normally use?
I normally trade on the daily time frame when I'm swing trading, daily 12-hour time frame when I'm swing trading, and when I'm intraday trading, it could be hourly, typically 2 hour, 4 hours. I like the 2 hour time frame a lot. 4 hour when I'm intraday trading, hourly when I'm intraday trading. So those time frames work out pretty well. But I also want to show you, and the last thing I'm going to talk about with Litecoin is that with Litecoin, it gave us this daily candle right here. And I pay a lot of attention to wicks, guys. So this is another reason why.
What's a Wix? Sorry.
Sure. So a wick is basically where the market comes down to and then rejects from, rather it's the high or the low. So basically it's an indicator to let you know this is where the market has traveled, but this is not where the market has closed. So the market opened and closed here in the red, but the wick just lets you know, this little black line lets you know how far the market went up before it eventually closed.
So if you sell at the top of a wick and it goes to be a super long red wick, then you basically did a good short, pretty much, right?
Right. So I mean, there's signals or indicators or clues. So I don't need this stuff to let me know what's going on with the market when I see this big candlestick with this wick shooting all the way up with a clear rejection down. That lets me know that in this particular day, even though we closed bullish meaning we closed positive, meaning the market made an upwards move or upwards gain, that the bears, meaning the selling pressure, was very present here. So this is an area that some people would say, hey, the market's going up, so I want to buy because it's higher than what it was yesterday. But as a technician, looking at this, being that this wick is quite larger than the body, there's no way I would get into that market. There's no way. And as you can see, the market turned around, went down, and then we had a little indecision count and went back up. As you can see over here, similar thing, and we went down again. So fast forward to where I was getting to the market, I got in somewhere in this day, and as you can see how the market closed, it looked like that there was potential, hey, the market went down with this wick, pushed back up, and closed bullish, meaning there's a potential the market could go up. Now, to be really safe, what I could have done and should have done, but I still take this trade 10 out of 10 times, every time exactly the way that I did it. But to be safer, I could have waited for the market to close above 220. That would have cleared this area, or even 225. That would have closed this area and then take a position, and that would have taken us to 250, 270, 280. So I really pride myself on my entry prices. Every trader, technical analyst is different. I like to get in early, not too early. I like to have good price action confirmation, but I do like to have pretty good entry. So when I am wrong, because I'm wrong, it doesn't cost me very much. And when I'm right, I have a lot of upside. So I'm perfectly okay with Litecoin, dropping. I was in and out really quick. A lot of people had their stop losses at 200, 180. I didn't experience any of that punishment. So, and I lived for the next day.
Wow. So let's talk about, let's maybe talk about a recent trade where, this obviously is a lesson learned, right? And I admire it because you obviously overcame what emotional feelings you had and just, cut your losses and, you moved on and that's that. Do you want to maybe talk about one where you were recently successful on or, because you're trading every day, right?
Yeah, of course. So, and to speak to what you just mentioned, there's no emotions in trading. Like, I don't care about losing money just as much as I don't care about making money. That doesn't move me or motivate me or excite me. It's really unfortunate that when you start trading, and maybe it's just whenever you start making money at a little bit more accelerated pace, you really don't see money as food, or you don't see money as things or potential to things. It's more just numbers on the screen. That's just kind of how I see it. So I have like no emotional connection to money at all. It doesn't, it matters, but it doesn't move me. So losing money is not that big of a deal, especially if you believe in a system that you trade on. If you believe that your trade system, no matter what it is effective and is proven and it's more probable to work for you than not, why worry about if you lose a trade? Only if you doubt yourself and you're like, man, I lost a trade, maybe I'll lose every trade. Then it starts to become an issue as far as losing money, but that's not a big deal. But I was recently just in a Bitcoin trade. Let me see. I bought and I sold. I think I sent it to you guys too. But oh yeah. That's what I sure was. I was in 2 Bitcoin trades actually. But I bought Bitcoin actually at this green candle bar right here. And matter of fact, I posted in the group. So in the group, and my chart looks a little bit different now. I should probably take all this junk off. But in the group, let me just do this real quick so I don't take too much of you guys' time. So we was in a downtrend, something like this on Bitcoin. Yeah, that's what it was. So just to show you guys, this was my downtrend on Bitcoin. I call this, when Bitcoin broke right here, I was very specific and I had different confluences. When I say confluences, I mean a number of things that as traders, we look in the market that are in unison or aligned with each other. So I had a lot of confluences that this was a legitimate break. And this is going to segue into another point that I'm going to make real soon. So this was a legitimate break, but I did not buy the market at 10,600, even though this was a legitimate break. With every break, I believe, comes a pullback. Not every break, but the breaks that I trade comes a pullback. So I was not going to get into this trade until we pulled back down to this trend line. Once we got to this trend line, I seen this bullish bounce and close on top of other things that I pointed out in that same video that served as confluences in the market. I took a buy here. And here's the thing. When this trade broke out, I said that if you get into this trade, your stop loss is right here. This would drive a lot of traders mad. Like, they'll go crazy. Like, oh my God, your stop loss is too tight. And like, they go crazy over this type of stuff because they want you to believe your risk to reward can't be that good. Like, your 1 to 2 is the best you can do. 1 to 2.5, that's the best you can do. And I agree with them. You know, I don't challenge that way of thinking. I let them have that while I go over here and make some money. So this is where
you're just smiling to the bank.
Yeah, they can have that. So this is my stop loss. Now, man, now pay attention to this. When you broke here, your risk is 10,650. Your stop loss is 10,000. Let's just say 10,000. That's $650. If you would have gotten to this trade, you would have went to profit a little bit. Then would have dumped down. You would have panicked because most investors, traders, they're weak-minded and they're scared. So they would have panicked and they would have closed. Well, especially when they saw this big red candle bar, they definitely would have got out there. They would have panicked. Well, when I seen this bounce, because I did, have this serving as part of my confluence, I got into this trade, and guess what? My stop loss is still the same. It's still the same. So now I'm 10,350 to 10,000. So I cut my risk in half. Why is that important? Because I'm trading less. I'm not allowing the market to hold my money. Just hold it, no interest, just hold my money. And I can take twice the position, twice. These things drive people insane. They're like, you can't do that. You're going to blow this. And I'm doing the exact same thing you're doing as a traditional trader. When I say you're, I mean the person that take these type of trades. The only thing different is that I'm a little bit more patient. This is the trade plan that I implement. And if it executes, granted, Bitcoin could have just flew straight up and I would have missed this trade. And guess what? That would have been perfectly fine. I don't care. If the market doesn't do the things that I need it to do to earn my money, I don't care. I'm not participating in that event. So I don't ever fear of missing out. Like, it's not a big deal. There'll always be other setups. In this case, this was a great setup, and my stop loss remained the same. If you notice, guys, the market never violated this candle bar. Look at my drawdown. My drawdowns were 10.365 to 10.320. That's instantly in profits. This isn't magic. I'm not a magic maker. All I'm doing is implementing a system that is sustainable, that is highly probable, and I'm disciplined and I'm patient. So that's how the market, that's how you lose money in the market. It's even if you got in here, it never hit your stop loss. But when you've seen this pull down, you jumped out the trade for sure, especially if you're using leverage. You jumped out because you don't want to experience any more potential loss. So risk management, that's part of my risk management is sniper accuracies, sniper entries, and getting to the market to where I like to call back to the wall, open sky trading. So,
man, I mean, I got to give it to you, man. I mean, I'm looking at this and I'm just a hot mess.
Yeah.
Look at this, like, you know, you got, you know, I mean, you got brass, you know, whatchamacallits down there. I'm like, what?
You probably had a field day with Bitcoin in the last couple of months, you know, with it dropping to like, what, $6,000 basically. Like, while I'm sitting there looking at my whole overall portfolio shrink, you're like, right?
No, and in the group, I called the $6,000 price level. I actually called it last year, November time, was going to $6,000. I said 9,000 was the first level, and then 6,000 was after that if 9,000 violated. So I called that November, right after Thanksgiving exactly, was going to $6,000. So it hit those targets, you know, obviously really well. And now we're about to find out if $6,000 is truly the bottom. And I'm about to say something else that might really sound crazy. We could go to $3,000 on Bitcoin. We could actually go down to $1,800 on Bitcoin.
Oh, wow.
You know, but it just really depends. I have to really chart Bitcoin out from where we are right now and see where we can go. But there's a lot of downside potential on Bitcoin. And right now, it's the bears have when I say the bears, the selling pressure is definitely present. So it's interesting. I want to see where we go with this whole crypto world for sure.
Well, let's dive into this right now, because this is kind of present. You know, you've obviously showed that you've got, like, you know, I don't know if it's like silver or chrome or something running in your veins. You know, there is no soul here. You're just, you know, hacking away at this, you know, which is awesome. I don't mean that in any negative way. I'm so blown away watching.
Yeah,
this.
it's like a walking trading bot, dude.
Yeah, no, this is amazing. So we're looking at Bitcoin right now, and I see that big old red bar. I mean, that's like market sentiment has turned. You know, everyone's jumping out of the buildings. They're all, you know, you know, it's all on fire. So you're looking at this. Tell me what goes on in your head when you're looking at this, because there's something in, you know, I know there's a smile somewhere in there, because you're just like it's almost like, you know, you're this like guy behind the scenes, like, ha 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 ha, I'm getting ready, right?
Yeah, to be honest, I don't care which way Bitcoin goes. Like, I really don't care. Just as long as there's volatility so that I can make a trade. That's all that really matters to me. I'm a long-term believer in Bitcoin. I think in the next 10 years, Bitcoin will be $1 million asset one way or another. So I really don't care. And I really, if anything, appreciate these down markets, because it shakes money out of weak hands, which is necessary. It's very necessary. It could be cruel sometimes, but it's very necessary. And the people that came into the market for the Lambos and the gains, they can get out real quick. And the people that really understand the technology and believe in Bitcoin, we can come in stronger and really benefit. So it's a gift. It's like Bitcoin. I didn't catch Bitcoin at $2. I didn't catch Bitcoin at $200. I got in around 1,700 and change, something like that. So Bitcoin dropped all the way back down to $1,500. That's the best day of my life. Because it doesn't matter to me if it's 1,500 or 15,000. I still believe that we're going to see a six-figure Bitcoin at the minimum, a seven-figure Bitcoin. If you're an optimist. So, but
okay, so now if we look at this, so I don't know if it's called, like, there's Mackers, there's Fibonacci retracements, there's all these sorts of things. At a certain point, when you look at this, somehow in your head, there's a down point and some sort of resistance level where it's going to hit, and then there's a probability that it will turn back up, or there's a probability that it will turn back down, right? And then if it turns down, there's another level and another level and another level. Do you maybe want to take a second and kind of, talk through us on this, how you look at this, how you analyze this, what goes on in your head?
Yeah, sure. So, I mean, it's really, I'm gonna share something else with you guys. Trading really isn't that complicated. When support turns resistance, for instance, where, let me walk you guys through an example. And I'm gonna draw a trend line for you. Where was our trend line at? Let's take it from here. Is that right? Let me see.
So that's like a pennant, whatever they call it, was like a pennant line, right?
These aren't perfect, guys, because I'm just doing this real quick for you. But give me 1 second. I'm gonna put this in blue so y'all can see. All right, so this is Bitcoin. So, and you mentioned Fibonacci, so let me grab Fibs for you too. So guys, this is like so stupid. It's so easy. So let's take a look at this break again, right? So we broke out of here and we had this pullback. So if you're trading as a retail trader, you know that there's two uptrend lines. I plotted in blue. So a reason for a person to get out of a trade, just for example, they would see that this blue trend line broke. And guys, if you pay attention to the market, there's certain areas that touch and retouch. So this blue trend line, the second one that I have in the middle, this is an area of, I call, importance. And I don't use a whole bunch of technical terms. I really try to make things as simple, contrary to what it might sound right now, but I try to make things as simple as possible. But let's just take this area, for example. What happened here? Like, is this rocket science? Like, this area serves as support. It broke support. Support came resistance. What happened at resistance? It fell down. So this is a classic example of a break, a pullback, then a sell-off. So some people could get in right here. The reason why I would not get in at this area is because sometimes the market pumps down and shoots back up. So I need confluence. I need the market to give me several reasons to take this position and put my money into the market. So let's disregard support and resistance, fib levels, disregard all of that. We're just talking about this blue trend line. The market broke it, came back up to it. Once it got to it, it gave us a bearish reversal candle. This price action candle bar. And as you can see, it sold off. Where did it sell to? The next major trend line. So that's a very basic, elementary example of support becoming resistance and eyeing for another target. So I could have a sell order right here after I see it break and move down. I don't care about all of this. If whoever wants this money, enjoy it. my order is right here. This is where my order is. If the market just shot down here, then guess what? I'm just not in the trade. I'm just not in it. It's no big deal. It came back and picked me up and took me to school.
Wow.
That's all that matters. So that's just an example. And you see it. I mean, that's why I love Bitcoin, because these patterns repeat themselves. You see a breakout over here, but what happened? It broke all the way back down. That's why that pullback is really important. And then also, which I also shared in the video, traveling from $6,000 to $11,800, that's a lot of energy. So for it just to fly through here is less probable than it pulling back. So I have a metrics of things that if we just seen a $5,000–$6,000 move and I'm at a major trend line, it's very unlikely that we're going to fly through it. So even with this break, there was never a point in this area I was looking for a pullback, only because we never seen a real pullback all the way up here. So I completely missed out on that, and I was perfectly fine, and it didn't work out. When the market bounced here, I still wasn't interested because we seen a break from this trend line, this blue trend line, and we seen a retest right here. So why would I want to get in this mess? Like, this is a no trade zone. We just bounced from here, and we're sitting on top of support, this black line. So there's people that may have bought here, and I didn't because I'm not interested. I want to wait till we get out of this mess, get a good pullback, and then buy. We got out the mess, we got a good pullback, I bought, and we took it up to the top. So these things repeat themselves. We've seen this break down here. The market pulled back to the blue trend line, then shot back down. So I don't know how easy or how much more simple, you know, Bitcoin wants to make it for us, because Bitcoin is so predictable. You know, short-term predictable. It's extremely technical. And there's people that say, oh, you can't predict Bitcoin. It's such a new asset. It hasn't been around. I don't know what charts they're looking at, because the chart I'm looking at is baby food. This is free money. It's the closest thing to free money.
Wow.
I don't know what else you want.
Okay, so if we were to make, you know, I'm not going to hold you to this, but, you know, and I'm putting you on the spot, you know, where's my buy-in right now to set up another trade? Because right now, if I am understanding you correctly, I'm dipping on a trend line, and maybe it's a week from now, maybe it's 2 weeks from now, but it seems like there's a swing trade getting set up, right?
It could be a swing trade getting set up towards the downside. So this is the thing, guys, right here. Oops, let me delete that. This trend line right here goes down. Bitcoin can roll all the way down here. There's some support that could hold it up, but until that's confirmed, I'm not interested going long. Bitcoin has room to roll. I like trading off of support, resistance, trend lines, Fibonacci's. When I see those levels, like this level right here, for example, this was a perfect short opportunity. I had support here. Support is this. Support/resistance. I had all of that right here letting me know this is a resistance zone, all of that. Then I had my fib level. That's this black line right here. That was the 0.236 fib. I had all of that fib right there. And then I also had this upwards trend. I had three things letting me know that this could be an area where we go lower, and lower we did. So the more things that I have in the market to give me confluence, the better. If you look forward right here, right now, we're at that same level, right? We're back at this main downtrend line. But where do we have up to go? We have this main upwards trend. So it's the same reason I didn't get in this area. It's the same reason I'm not getting in this area.
So you're saying probability. Okay, now I get it. So you're saying probability, there's, and I don't know what the number is. Maybe it's a 50-50, but there's a 50% chance that 9,800 could bounce back up to 11 grand. But there's a 50% chance that 9,800 could bounce down to 6 or 7 grand. And so probability-wise, it does.
With this amount of dump, I doubt we break this blue line again, which is $11,000. It's not looking very probable. Is it possible? Yes, but it's not very probable that after we dumped this hard, we just bounce back up and shoot through the moon. That's not a very likely event. It would need to happen. If someone bought here, congratulations. But I would not get into the market until we're up above here, you know, around 11,200. That's where I am.
Because it's a different trend line and everything like that. So you're saying because we're in this zone right here, we're in the upper part of a resistance level.
Yeah. So here's the key thing. This blue area is support. So this red line, that's the downtrend line. We're on the opposite side of the downtrend line. But we're also under this sub blue upwards trend and above this blue upwards trend. So this area, all this area right here is play action. Bitcoin could go anywhere in here. So if you're looking long, I'm not very optimistic about it. And the reason being is we just broke this. We had a retest to this area. We struggled. And look at this big engulfing candle. Granted, we are on the 4-hour time frame, but look at this big engulfing. Engulfing meaning much larger than the previous bars. These events in the market, they don't happen for fun. They happen and they're indicating, hey, this is a potential indicator where we're going for the next few days or the next few hours, depending on the time frame you're looking at. These things just don't appear and then just the market just go the opposite direction, typically. Anything's possible in investing and trading, but for this and where we are, we're in this pocket where we're above, we're in this support zone, we're under this upwards trend line. It's not a trade to buy. And if I was looking to short, I'll probably wait for some type of pullback to another level to get into a shorting. But the trade happened right here. This was the trade. Getting in the market right here, you're chasing the trade, and I don't chase trades. So if you didn't get in here, then yeah, you're done. You're not in this trade.
Wow. Okay. So wow, we've been on for over an hour, and I know we're gonna get back on because this is just so fascinating to me. I'm learning so much. I don't know what you feel, Mike. It is.
Oh yeah, definitely.
But let's just kind of wrap things up. So I'll throw the question out there. If I'm a long-term person, so I know long-term, I believe that Bitcoin's going to break 25,000 sometime this year. So whether I buy in at 11,000, 10,000, 9,000, or 8,000 really doesn't matter in the long term. But, I'm still human, right? So I'd love to get the best deal. Mm-hmm. So given this, if I understand this correctly, I may actually want to hold off on buying in for the next week because there's a good probability that Bitcoin, based on these trend lines and resistance levels, will hit $8,000 or $7,000 again before it recovers and gets going. Do you believe that? Agree that? Am I off base? That's kind of my takeaway from everything.
No, I don't think you're off base. Those are real probabilities. With Bitcoin where we are right now, I want to do a real thorough plot as far as where my targets are. And just like I did in the last video, I give people exact numbers. I say, hey, this is where Bitcoin is going, where I think it's going. I don't say, oh, it could go up, maybe it'll go down. If it goes up, then look for this. If it goes down, look for that. I take a position. And that might not sound very honorable, but in trading, it's a rarity because nobody wants to be wrong on record. I don't care. I'm gonna tell you what my position is and why I believe that it is. Win, lose, or draw. So I'm gonna do a real thorough plot on Bitcoin where it's gonna go. See, what's interesting to me about Bitcoin is we may have formed a double top, which is not really that great. And we have this neckline break. And let me break this down for you guys so y'all can see. Let me just erase all of this stuff. So we formed a double top right here at this point and at this point. So that's not a very good thing. And the second top was actually lower than the first top. So that's a very classic reversal pattern as far as technical analysis is concerned. So if this neckline breaks right here, then we could see really lower lows. This thing can stretch its legs out for sure. So this area is really important. I mean, Bitcoin needs to show us something here because if we break this area, we can go much lower. And I will give that exact number and maybe even exact day as far as when and where I think those targets will be achieved after I do a full, thorough analysis on it.
Yeah.
So this area is really important. As you can see, how the market reacted when we got here. We bounced really hard the first time. The second time we crashed through. We flew through this time, which was a little suspect. And I mentioned that this is very suspect. We just fly through this area. We bounced here. We have a lower double top, and now we're right back. So it's not looking all that great. If we get a break, it could go much lower.
Well, let me ask you this. I mean, you've really whet my appetite now. So how long, can you get this thorough analysis? What about Friday? Is that enough time for you? Is it next week?
Yeah. No, it won't take that long. It takes maybe an hour, maybe not even that. And just
let's plan, because Friday morning I'm going to sync up actually with, I don't know if you know who Prince is, Prince EA, but Prince and I have been talking about, learning how to trade and everything. But we're babies compared to you. I know Prince will be interested to hop on, but we're scheduled to hop on Friday. And I'd love to just listen to this. I mean, this is, I don't know what you think, Mike, but this is awesome to me.
No, it's definitely cool. I think, I've been looking into the whole, I was probably going to allocate a little bit to playing around with it, but, obviously, I'm a holder too. So I definitely looking at this downtrend and hoping for another 6K buy-in.
Wow. So let's plan for this. I'll have our people, we'll organize something, but let's plan for Friday, let's say 9 Central-ish or whatever, we'll confirm it. But anyone who's tuning in and spread the word, we are going to watch Yusuf do his analysis. He was right before on the $6,000. Let's see this magic crystal ball. I'm really excited. I you're putting yourself on the spot, so
I love it. That's what it's for. That's what it's for. And I encourage. And I've actually met some other really good technical traders from the group. So I would be remiss if I didn't mention them. This is a guy named Raman, Abdur, Antonio, Joey. These guys are really, really good as well. And we kind of lean on each other and share ideas. And I just encourage people, no matter what their position is, to have a position, to give, a view, a number, a figure, say, hey, this is what I think is going to happen, and here's the reasons why. It's too easy just to say, oh, it might go up if it breaks this, or it might go down if it breaks this. And let's kind of, have a forecast of what might actually take place. So that's what I try to do. Based on the information given, I'm going to give you where I think the market is going, not just a whole bunch of possible scenarios.
And you know what this is making me think about, Charles, is kind of the whole traceability thing you're talking about with the Jarvis ICO. Is people's track records are important, right? So
no, it's hard to draw. I mean, that's the definition of leadership, though, if you think about it, right? Leadership is I draw my line in the sand and I stick my neck out. That's what it is.
That's what I do every time. It's every time.
I think this is awesome. I'm excited. I hope everyone else who's tuning in is excited about this. 9 o'clock Friday. We're gonna get this. This is gonna be amazing. This is gonna be a blast.
Cool.
I'm with it. Mike, man, it's been awesome. I've been doing all this talking, man. I wish I could let you get more action in this thing.
No, man. I mean, you're the expert in this. We're talking about trading. I'm a developer.
This is. Yeah, I'm just soaking it in. This is awesome. This is great. So
I'm just soaking up the knowledge, man. I think it's important to understand the trends even for long-term people, because I made a couple of gains on trading back in I bought in the Litecoin at $40 or something. So, I definitely totally covered my investment just following trends in Litecoin way early on. So like you said, I don't really care what happens now that I've made my investment back. Obviously I definitely want the portfolio to grow, but there's not really much risk on the table at this point. So, so watching those trends is definitely important.
Yeah, most definitely, man. Most definitely.
This will be fun.
I'm excited.
Well, let's wrap up. But great having you on, Yusuf. We're definitely going to have you back multiple times. I love it. I love it. I think Mike loves it. I think everyone's still tuning in. And we'll be in touch.
Awesome.
Friday.
Appreciate it, guys. Peace, man. Thanks for having me.
See you.
All right.
Thank
Talk to you later. Okay. Bye-bye.